Good evening. So I just want to show you the market outlook for the week, what we're possibly going to receive from market of gold and euro USD. So I presented, I posted on the forum, my trading forum on Telegram. Yeah. Trying to check. Yeah, this is you see the outlook for the week. So I posted a euro USD and this is good. Gold might likely go to push upward. This is a 15 minutes. Might likely go to push upward to fill this liquidity void, then start coming down a bit, then it kind of move up again. So just that's a possible. It's not 100% prediction or accurate, but at least the probability of price moving in that manner, yeah, based on the fact that is presently available. So if you look at those videos I posted about the week, how to identify the weak and the stronger zones. See me talking about a protected. How do you know if price will likely come back to that zone? Using what we call the target and protected stuff, a zone. So you will see that in that gold weekly chart or 5-minute and 15-minute chart, you will see that we have gold filling up and down because we can see gold filling up and down the liquidity void, yeah, that has been marked out by market makers taken out of highs and the low. Like for example, this place in the past, you see the gap left behind yet this place. Then now to this place was another liquidity gap that was fed upward. This is on the 20th of May, which is on Friday. Sorry. On Friday. Yeah, on Friday. This is Thursday. So Thursday, this is Thursday high. Then we have accumulation around here, leaving out this liquidity gap here, creating the liquidity gap inside this liquidity gap in the internal structure. Yeah, we have this as the protected demand. Yeah, this is the protected demand because it was responsible for the taking out of these lows, you know. So it was responsible for taking out of these lows. This place too is a protected, I would say this place, it's a protected demand. Sorry, protected supply rather, protected supply, but it was responsible for taking out of these lows here. So now you see that likelihood the price trying to come up to it on Friday. This is the market opening on Friday. Market opens on Friday. Push lower to take out these lows, fill up the liquidity gaps, then reversing upward into the opposite. So this is manipulation, then this is distribution. This is 8 o'clock at London market. We started seeing a new sessional bearish structure to take out these liquidity voids here. to fill down this liquidity void here by taking out these lows that was created. You see that in our formula, which we in our 3 template, which I posted on the forum, talk about the AMD trading template. We give you three steps of identify, 3 steps of action, which is called an action sheet. So that's what the guide that will help you to trade those liquidity voids or those zones that you have identified as tradable zones or protected and strong zones. Yeah, the first step we have here, we say identify high-time frame directional buyers. Then the second step, you go to identify AMD setup in that buyer, in that POI, which is point of interest. In that zones, you have to identify the setup, which is SH plus BMS, SH plus BMS plus RTO. That's the second step. And you can have the pattern. You have the pattern for sell as this. It has to be a supply zone. This is what you'll be looking at as the setup. What are the setup pattern, which price will likely come back after clearing out this. It will come back and fall into this. Zone. So you see the setup like this. Then you see a retest to it, filling up this. After filling up this, this is downward here. Now it will now go up to retest that supply. So this is protected because it was responsible for the taking out of this low. This now becomes a protected supply. So the likelihood of price coming up to that zone, or if you have imbalance here before the zone, you may take out the imbalance and come down. But there's likelihood for price to try to come up, either to the 50% premium price or to the zone directly, which is the high probability zone of our Fibonacci level. So if it is demand zone, so you look out for this setup. That is for if you are going to buy, you look out for this setup. Once price comes into this index, moves upward. This is the stop hunt, which take out the previous session low or the swing low here. Then there's a BMS here. So this place now becomes a strong and protected supply because it was responsible for the taking out of this. It was responsible for the creating of this break of market structural range high. So now you look for price to come back into this zone, then you buy at the retest. That's just a simple formula. So you follow this template. First, identify the marginal, but how do you identify the directional buyers right now, which we are going to talk about, which we use in our market analysis? You must first get the directional buyers. That's most important. You must first get the directional buyers. So let me open my stuff. This is MetaTrader from about trade, the company does those prop firms that give out funds. So this is my third account size with them. Now, because this is weekly charts, right? So before here, you can see that price initiated a strong and weak, zones. And in those strong zones, price usually retested. So they were retested. Yeah, they were retested. So this is a demand zone that were responsible for taking out of this low, and price came down. This is a demand zone that was responsible for this, and price came down to retest it. So this is okay, the response of this take out and price went upward. Then this to then taking off this of liquidity void here into this a strong, that strong supply, protected supply. It was protected, yeah, by market maker. So that means price, once price get to this place, it is hardly it will be broken above. If it is broken above, that means there's a change in market structure. Yeah, but right now, it was price gets into this place because it was protected. Why? Because it was responsible for the taking out of the structural low here. It breaks through it, there's BMS, then price move back into the zone after clearing out this liquidity void, or this structural, internal structural highs were cleared out. The liquidity void, that means the liquidity void has been filled up, coming to the zone, that comes down. There's the liquidity void here. So likewise, we have this. It's not as strong because it never took off any, any DC here. Yeah, this is not as strong. That's why it was broken above. So it becomes a weak supply in the future. The place becomes a weak supply in the future. So you must identify those zones that are strong and that are weak for your analysis, so that you will know probably the price will come back to that level, which will be your fault. But this is where the order is flowing out from. The order is flowing from a strong zone into a weak zone. The order is flowing from this strong zone into a weak zone, right? So this is a weak, because this is a weak demand. It was broken below. Yeah, it was broken below. This is a weak supply. Sorry, a strong supply. While this is a weak demand, which was broken below. So that's why price pulled up to this a protected demand for sell. So price market maker will use that protected zone to sell, because this is where the order will flow from. The order will flow from this strong to the low, to the weak. Yeah, that the change of hands from the strong to the weak. Yeah, sorry, from the weak to the strong. Yeah. So if you move forward, you see that before now, this was a stronger demand because it was responsible for taking out of this high. This is SH here. Call this place SH, then BMS. So we are likely going to get a retest. We are waiting for RTO to complete this formula here. So this is the RTO now, which was manifested last week. So this is last week candle. Similarly, this engulf here, I sent out my signal or my DC broadcast to people that, okay, gold will likely go to move higher because of what? Because of this place. So right now, presently, we are going to have, because this is a strong and protected supply, right? It was responsible for taking out of this low and price breakthrough. So likely we are going to see price either move higher to this place, or it comes out here. After then it kind of direct sell from there, right? Because price is still coming down. It's still coming down because this is a protected and strong supply zone. So price will come up a bit. It cannot touch this or halfway, because this is a broken demand or a broken support level. This will turn into resistance here or a new supply zone, right? So that's why we are having confidence that price will still push a bit higher. So still push, it may push to this place and start coming down. We start coming down a bit to this place, then move higher again. Because this place must be filled out. It might not be first day, it might not be second day. Depends on what the price gives you, right? But surely price will still go to move higher. Yeah. So we have that behind our mind. Then if you go, so that means we have this structure now. We have our directional bias, right? And that the market is still in a strong sell. It's really a strong sell. It's really a strong sell, but there may be a pull back upward, to clear out the internal structural highs, and you understand, and start coming down. If you go to a daily time frame, you see that a daily time frame, move to a daily time frame. So you are going to do your multi-time frame analysis from weekly down to daily. Wow, this is it. So you can see right now, presently, this is what we are having. This is what we are on gold. This is what we are having on gold. On daily, this is monthly zone. This is daily zone. This is white. This one is the daily zone, right? It was a strong daily zone here. Supply zone here, because of what? Because this low was taken out by this high. Becomes a strong one, or it is. So it's either price retest to this place, either this place is another. So in between, yeah. So that this place or this place inside that weekly supply zone, we are having multiple zone that price can get into. So now, also you can see before that one, we see get another one here. This place. So that's why I'm heavily confident that this place is going to be retested. This broken and that broken a weekly demand is going to be retested, because on that daily this thing here, we are having a more internal structural high of that, or structural supply, which is strong. It's strong and protected by the market makers, which are what are going to be using as the point of sell, to sell. This is where the order will flow from now. This order flow, the market order flow from here down. So once market comes here, they kind of push other part by Monday or thereabouts comes here, it will likely go to come down again, or it moves up here to this one and pull down, or it gets to this place. Anything can happen. Anything can happen. I'm not the owner of the market, but this is our probability. This is what we are seeing based on what the facts on our hand. We are going to be trading the market based on the present action or movement you are seeing the market here. So whatever way the market moves, we follow it, we go through it. If we descend down, we sell. If it moves upward, you know that okay, we are coming here to wait for it to sell, for us to sell now. That's for daily. So that's the directional bias we still have hope that market is still in a strong sell. All this one just, it kind of pulled back. It returned to those strong and protected zones that we have identified. So all this area are point of sales, point of sales. Yeah. Yeah, in 4 hours, if you go to 4 hours, you see the same thing. Let's see 4 hours. Wow, it's strong and protected. You can see that the more we are going lower, the more opportunity we are having. But those are internal structural range highs, internal structural ranges that are available in the market. So that means this is 4 hours. So that this place has been filled out. The liquidity void here to these zones has been filled out. So possibly price may come like this. It come down. Yeah. Other this then take out this place. Because this place is another. If you come down here, you see that this place is another strong and protected demand. So that means price may come down and come to fill this place, then fall into this zone, because it was aiming for this to taken out this side. Then so that means there's another SHBMS RTO from that they're being manifested. So we're expecting price to still move back a bit. Then under 4 hours, that's what we have. Under 4 hours. So then it kind of starts moving upward again. Yeah. This place too is a protected, it's a protected zone. So the more lower you go, the more opportunity for you to sell and buy. Scalp. You scalp up and down. You can scalp up and down based on what? Based on that or that formula, trading plan, the AMD trading template will give to you. Yeah, based on that plan. You can see this line is that broken support in that weekly and daily time frame, which is here. You understand? So there still liquidity gap bit left here. So price, but this is strong. It's a very strong. It's a very strong supply zone. But we don't know, and this gap has been filled up to that zone. So there's a strong likelihood that the price will come down. It can come and move higher. Then let's go to under 1 hour. Under 1 hour, I get the same thing. Wow. Under 1 hour, 1 hour, 1 hour. That means this place has been filled up. So there's likelihood that price will move down. This place has been filled up. Kind of move is higher, then comes down. To other this place here, this place. Before you see a move down. So sell is most probable than buy. Understand? Sell is more probable than buy, but you have to watch. You have to use your formula very well. Follow the formula. This BMS. So we are waiting for this place. If it comes here, you can buy scalp in kind of a scalp in the market. Then if it comes up higher, you are going to sell. You're going to sell. Once this is double high, you come higher to take off this double tops here, this equal height. Come on, take it up, then start coming down, because this is a supply zone. That protected supply zone. Yeah. We come up higher to go up higher. Then so that we're having that 15 minutes, 15 minutes, 15 minutes, 15 minutes. So the same thing. So this is what happened on Thursday. This Thursday went up so high to fill out the liquidity void. Yeah, went up so high. You can see it. So now Friday came up a bit to take out a little liquidity above this Thursday high. So Monday will likely go to be sell. Yeah. If I'm looking, go to do my Elliott wave. This is Elliott wave 1. Elliott wave 1. That's why the probability of price still the kind of Elliott wave 1. Three, 4, 5. Or internally, we have an internal structural wave here. That's Elliott wave 2, Elliott wave 3, Elliott wave 4, and finally we have 5 here. That's why I said price will likely come down, but it kind of maybe, I don't know. So we expect from there, we expect sell, but be careful, be caution of don't rush to sell until you have seen a confirmation. Don't rush to sell until you have seen what is that confirmation. This formula must happen in this place before you now sell. Must happen. Yeah. So then we're going to see what happens on the opening price. Get the opening price like this. Then the price may likely move higher. They start coming down. Yeah, into the opposite. Yeah. So that's for euro. That's for gold. That's for gold. That's for gold. So you just have to take this precaution and trading with a kind of this. Use so many confluences. We're giving out confluences here on the market. What to use? The point of confluences to use. Equity inducement, market session open, London market and US market opening. So we're giving you a lot of confluences to use. Yeah, so that when you see market trying to when you see market trying to react at those areas, this area, you get it, you get to use it them as your what, as your point of reversal, confluence with other market distance. So that it aids your predictability. Yeah, it aids your analysis, especially daily open price and this midweeks reversal, liquidity void be filled up, or down. Then market session will be based in New York, London. You'll be seeing it also, doing that for you. What we have in that in this area, you can see this confluence here. See this confluence here. London, this London opening goes to the zone I put up. This is to this price opening. Then we have this flag units there above, push above this. Then there was imbalance. There was imbalance here. Imbalance here. So that's why price could not move higher. Middle market opens here, you start seeing accumulation below the opening price. Then there was a push upward to clear out all this liquidity pools. Then price fall into this imbalance. They start moving downward. So this is a Gothic pattern below the opening price. Below the opening price. Then this is a flag, bearish flag that comes from here down, here upward, shooting upward. That's a bearish flag. So as we got this, we can get this as this one was taken out, then price retest back to it. You can still use this as a second leg of sell. This will be the first leg of our sell. So as the price comes down to this way, you got to, this is a zone, a protected zone, a protected demand zone, right? So protected demand zone. So you are going to look at it that, okay, once market fall into this zone, possibility of it getting, it went up so much, so huge, right? Yeah, so huge. So that is how we traded this in. And so that is how we got our analysis on gold. That market on is on gold.